All right, here we go. How do I get this set up? 1 second. I'm going over how to sell options because I feel like nobody knows how to do this, and it is important to talk about because it makes a ton of money. A date with Kathy. All right, let me give this a second. Interesting. This is coming down pretty nicely right now. Look at this volume spike right here. Good morning, buddy. All right, so I'm just gonna go ahead and start talking about this. But if you want to sell, everybody always talks about buying options and trying to make a ton of money on the upside, right? And there's a calculation of theta. Everyone knows what theta is, and obviously it decays like crazy every single time it goes sideways or it goes against you. And if it goes against you and sideways, then you're just going to lose double the money. Well, the transition, I've always done this on my long term portfolio, but I've kind of just explored the idea of almost day trading selling options. And obviously, the return isn't as great because you know your max gain, but the consistency that happens in selling options is ridiculous. The amount of money you can make over time as it compounds and you make more trades, you make 4 or 5 trades, you can make a good amount of money just looking at the sell side rather than the buy side. So earlier today, I looked at some of these premiums. Obviously, you need to have 100 shares in order to sell options, but you could do things on Snow here that are 150. So if you have a $15,000 account, whether it's like a Roth IRA, a long-term account, a trading account that has that much money, you can actually make income for yourself. And if you want to do something that's even cheaper, I would say Honestly, TQQQ has some great premiums on it as well, but I was looking more so Coin if you had around $6,000 in an account because these premiums are ridiculous. So if I look at Coinbase, Tesla has the best premiums out there, but Coinbase has like $300. So instead of paying this $300 on these options chain, you can actually sell them against them if you have enough money in your account. So if you look at this, these are 124% implied volatility and $41 you'll make every single day you hold it. So if you hold these weekly ones, you could end up making around $300 just by collecting the premium. And if it goes up or sideways, you make money by selling the puts. You can also sell the calls, but you need to actually have the shares. So for example, what I'm doing right now is Snowflake. Snowflake they have earnings this week. Their premiums are spiked like crazy. So if their premiums are spiked, I'm going to make money basically no matter what. Obviously, there's some factors in there. If the market tanks on me, then maybe I'll end up losing money. But I'll show you exactly why there's very, very minimal risk here. So look at how expensive these premiums are right now. There's $600 that are in the money, meaning you could just collect that $600. So I ended up selling these $146 puts right here at 6:15 this morning. These were worth $615. So by selling those at near the bottom, I think it was down a little bit for a second. But if you go to the chart tab right here on Snowflake, you can actually make money as it goes sideways or if it goes up. So if I sell puts, I just need to have enough cash in the account in order to sell these puts to have that the collateral on the opposite end. So this is technically called a cash secured put. So instead of this going sideways and me getting pissed off that it's not moving much and I bought an option and it's not going down or up, it's just going sideways and I'm losing money because theta decay is just shredding the contract, you can sell them and take advantage of that. So if I'm selling this contract on Snow, I figured, okay, so if I go to the daily chart, we're pretty much near this bottom. We had a nice little bounce. This kind of looks like a hammer candle, but there is earnings this week. So if it bounced off this, it is starting to expand on the Bollinger Band, so there is some downside. But with earnings this week, I bet you it starts to chop a little bit unless the market just continues to tank. So crazy thing. What's going on here? What just happened? Why is he freaking out? Why are you freaking out? What happened? I don't see anything, but regardless, I'm looking at this Snowflake put still. So if I was looking at Snowflake, sorry, somebody just told me that something was going on, but it didn't happen. So I'm looking at Snow here, and I saw that the downside was going to be there, but the consolidated levels, I don't think that this is going to move too much. So I ended up selling some out of the money puts. So obviously, if you buy out of the money calls or out of the money puts, you generally lose money unless you catch a big move at the perfect time. So when you sell options, timing is on your side. Theta decay is on your side. So as the contract's premium melt and get closer to zero, which they are designed to do, you can just collect that money. So yeah, you're not going to make the 100% returns or the 300% returns or 200% returns on selling options, but you do get to take advantage of choppy ass markets that basically have been happening for almost 2 months now. And especially when you sell individual securities, they're going to bounce back and forth very often, especially when they're anticipating a big earnings event news. So I'm looking at Snow, and when I sold these Snow puts, I just collect that money. So it's like basically Monopoly. You're just passing go, and you're collecting $200. So you want to look for premiums that are pretty expensive. Obviously, you can sell the ones that are like $100 each, but I don't know. It just doesn't seem very promising to me. That's not a high enough return for me. So I'm looking at these 146 puts. I sold these for 615. So technically I'm still up $80 a contract right now. I could buy them back and make $80. But since I sold them, I collected that $615 no matter what until I buy it back or I exercise the shares. So all I want this to do is either go up or just stay sideways. So if you look at this theta value, every single day that I hold this overnight, I'm going to make $93 just holding it overnight per 100 shares. So, oh God. 390 or 94 right here is the theta. So if I just hold this overnight, I'm going to make $93. And if I hold it again overnight, I'm going to make another $93. So the best part about selling options is this starts to go up overnight, or if it runs up a little bit or stays consistent sideways, theta is going to crush these. So these contracts are going to be worth $200 less. So I'll just collect another 300, another 400. And as these get closer to zero, the contracts melt as they get to zero, but I'm just going to sell the contracts and I have no risk on the other side because say it drops down and expires to 145 or 144, even say that it gets to like 145 or 144 by Wednesday, which is their earnings release. I'm not going to swing it through earnings. I might, but I doubt it just because that's super risky. I don't want to buy the shares much higher than I have to. But say the stock gaps up for earnings or it doesn't go anywhere, then these contracts, the IV percentage will go back to normal. The theta will shred the contracts like crazy, and I'll just collect all of that $600 in premium for holding it for 2 or 3 days. So you could easily just take advantage of the premium run-ups and then just collect that $300, $400 and walk away. And it's pretty consistent, 3 days, 4 days, $400, just collecting that premium often while the market chops and while the stocks go sideways. It's really, really easy. But the best part about the selling options is it can either go sideways and you make money, or it can go sideways and the direction you want it to go. So as long as this isn't falling like crazy all the way down to 146 today or 145 today, then I'm just going to make money regardless, because it's either going to chop sideways and I make money off of theta decay as the contracts decline, or if it goes up my way, I make money because it's going in the opposite direction and theta is on my side. So it's basically playing with the house here. It's probably the best strategy you can do, especially for, yeah. I love that. So selling the SQQQ you can also do. I see that you do that. But selling Tesla puts for 5%, you can make so much money just doing that on an intraday basis, especially when it gets closer to Thursday and Friday. And Snowflake is like $300 a premium that's close to the money or in the money. And usually Fridays chop around and individual stocks chop around. So as Friday comes around, they have to move significantly in order for you to make money. So that's why a lot of people scalp calls or they scalp puts on the buy side on Fridays and Mondays, and they're looking for those quick in and out moves because theta shreds the contract. So if you think about it, you can make a good amount of money by scalping in and out. But if you want time, you're busy, say you have a 9-to-5 job, or say you have a family, or say you got, I don't know, maybe you have basketball practice. You just want to sell options. It goes sideways. You just make money off that. So it's consistent, time is on your side, and you play with the house at that point. So just by collecting those premiums, it's ridiculous. And then once you get up to enough money for having Tesla in your account, say you have $20,000 in your account, maybe it's a long-term account, maybe it's a Roth, maybe it's whatever. You can trade on any of those. These premiums are $700, $800. That's why I'm playing Snowflake right now, because the premiums are so high, and you don't really see stocks this cheap with this high of premium usually, unless they're super volatile. But with the earnings event this week, they obviously expecting a big move. Theta's there, so I'm just collecting these theta by swinging it overnight, because $95 just for holding something overnight, 2 nights in a row, that's just free money. So selling options just way better in my opinion, especially if you're looking at something like this where it's just going sideways. It's starting to go against me a little bit, because if I'm selling puts, then obviously I want it to go up. Maximum risk here would be, let's just say worst case scenario, if this, I have 146 puts, so I'm just going to collect $600, maybe a little bit less, since I probably won't swing this through earnings, but I'll just take $600 off of this play, most likely, probably around 400-ish, maybe I'll buy it back. But worst case scenario here, it drops down to maybe like 141, and I realize maybe like a $100 loss, $150 loss, because after theta decay and after how long it'll take to get here. Or if I swing it through earnings, this is like worst case scenario, say it gaps down to like 130, say it drops $20, so it's trading at 130, and I sold those puts, I get to keep that $600, right? The $600 in premium is still mine, but the worst part about that is that I now have to buy shares at that 146, and it's trading at 130, so I'm technically down. Since it's 100 shares, that's $1,600 I would be down on the position. But I got to keep that $600, so I'm really only down $1,000, and I only needed to go back to 140 to break even technically, since I was only down $1,000. But the best part about selling puts is if you're selling puts on companies that you believe in for the long term, you could sell that, collect the premium, even if it goes against you. You're down a little bit, but if this goes back up to 160 in like, I don't know, a couple weeks or a couple months or whatever it may be, if you really believe in the company, You can sell, realize those shares, and do the same thing. Or you could sell covered calls while you have the shares and you're down a little bit just to make some premium back if it's going to be a little bit negative for a while. So selling puts is almost like kind of like paying yourself before you invest in a stock. And it's just like, it's almost like a sign-on bonus is kind of how I describe it. So the market is just taking a nice hit right now. What just happened? So the market's getting weaker. It's above 500. I don't like this. It's usually this upper shadow looks like it's going to come down and retest this 397. Looks really weak right now. I hate that. But still in these puts because I don't think that the snowflake is going to react to it too much. And like I said, even if it does go down to like 148, 147, these might be worth right around where I sold them at because theta is going to be on my side. Any bounce is going to continually shred the contract. And then overnight, I'm going to make an extra $93. And then another overnight, I'm going to make an extra $93. And then Wednesday, they have earnings after the bell. So I have almost 3 full days of premium decay, and I can make a ton of money. So I don't know. That's just my spiel on selling at the other Scott. That is the other gold mine of Tesla. Especially selling Tesla puts, I feel like, because anytime that it's bullish, you can sell puts, just collect that premium. And then if you have shares already, you're making money on the share side selling puts. But even if it dies on you and you have to exercise the shares, Tesla is most likely going to go higher, right? Especially around these levels. I think Tesla can probably pull back to like that 180-ish level. But even as you see these go down, these are only worth $560 now. So it's at low of the day and it's at $560, and I'm still up $50 on that position because I sold them for around $615. So you can see that these are worth $565, $575, but even at low of the day, this is why premium decay is so important. So if you bought puts here on the sideways consolidation, it goes against you, you're down like 50, 60%. But I sold puts right around this level. I think it was right around here. I sold the puts around 150.30, and now it's back to low of the day, and I'm still up on the position. So these are still down 23% on the day, which is ridiculous. Being down 23%, meaning that I'm on the opposite side, so that means I'm up a good amount. So these are at 570, sold at 615, and even though it's at low of the day, I'm still up on my position. Yeah, so you make money from holding the theta decay. Well, you don't really hold the theta decay, but theta's on your side. So think of it as like three ways of making money, right? So you buy an option. There's 2 things against you. It's either if it goes against you, then you're fucked. If it theta decay, chop sideways, then you're fucked. So you basically need one of three things to happen. Whereas your odds are better on the sell side because you have 2 things on your side to make you money, whereas only one thing could go against you. So if you're on the wrong side, it's okay because theta, if it's going a wrong way very slowly, you're going to make money because it's going to chop in premium because of that theta decay. They're literally designed to go to zero. So you're not going to make as much money selling them. Obviously, $600 is not life-changing money, but for only holding for like 2-3 days, it's just an easy collection. And obviously they can go against you. You could buy back, if it's going into earnings and this ends up selling off pretty aggressively down to 146 today, and I go down, I think like maybe 150, I'm still going to hold it overnight because, theta is just going to chop it basically in a fifth because it's $93 for holding overnight. So even if I go down 150 today, tomorrow it'll be down 40, $50 because of that theta decay overnight. And if it jumps up even more, basically flat. So it's very safe in my opinion, especially if I want to invest in this stock for the long term. So you can't make those massive returns on the SPX. So if the SPX just died right now, I look at SPX. Let's say that we traded the same day expiration puts on that little drop down that just happened. You're not going to make these massive returns like this. Let's see, SPX is, let's say we wanted these 39.75s for today. Send it to red. I'll go back to my charts. These contracts literally just ran from 120 a piece to 400 a piece of that top on the SPX. So on this little pullback, I guess it was a pretty nice pullback from high to low down here. went from 120 to 400. So you could have made a ton of money in 20 minutes, but if that didn't happen, Theta Decay would have absolutely destroyed you, because you can tell right here these were worth 500 this morning around this level, and then literally a squeeze would have taken you out $400. So you probably would have got stopped out. Most likely here, if you're trading same day expirations, Theta is going to destroy these. So as you can see, this little spike up, you just lost $70 on the contract. So buying options is a really good opportunity. You can make a ton of money on them if you're on the right side, if you scalp in and out. See, if you scalped this candlestick only, you saw some weakness here, you thought it was going to come back down and test VWAP, all of a sudden it just shits the bed. You could have taken 150 all the way up to 350 if you bought top to bottom. So there is a ton of opportunity in buying options as well, but on the more safer, consistent level for those that don't have a ton of time, selling options, you have two parts on your side versus just one side. So what's a good percentage of Theta you should consider when swing trading options? I don't think it really matters too much. I just think that the chart setup really matters. But when stocks have earnings like Snowflake does this week, and you're seeing a spike up like that already. So look at this. So it was at low of the day. I was still up in my position. It started to come down a little bit. Now this spike up, I guarantee I'm probably up another $100 on the Snowflake position. So a good rule of thumb for Theta swinging. I don't know if it really matters that much. It all depends on the contract value. But if I'm making $100 overnight just by swinging a contract, that's easy. It's easy money. But I mean, if you're looking at Coinbase, let's see how much Coinbase is. I would say that the more Theta Decay you have, the better. So like if you're swinging Coinbase, you only need $5,800 in your account in order to sell puts or calls. And overnight is $40. But in comparison to the contract value, $300 you're selling them for, and you're going to collect 40 every single night you hold it. That's not bad. It's really not bad at all. This is like, I don't want to say they're very small gains, because $300 to collect in 2-3 days is great money, and once you get up to your contract values of where you can be able to trade Tesla, and these don't have to be same weeks. You could trade Tesla premiums here. Look at these. So say you think that Tesla's going to bounce again up to this 220 mark, because it did bounce off this lower level here. Kind of closed above it, and now it's starting to bounce again. So it looks like it has room up to this 217. If Tesla, say you had $20,000, let me just show you the opportunity. Once you scale your account to a good size, whether it's Roth, whether it's individual, whether it's, traditional IRA, whatever, you can actually swing no matter whatever one you want. And Theta is going to get to you regardless. So if I swung puts for next week in Tesla, these 205s, and I think that they're going to run anyways, or 202s or 200s, I could sell them for 900, or maybe even I think it's going to be much higher in 2 weeks. These contracts are going to be worth 1,200, so I can make $1,200 just by swinging these if it continues to go up. But clearly, unless Tesla tanks, I'm going to make a good amount of money just by holding these and collecting this Theta overnight as it gets closer to zero. And if it's trading anywhere near the money, look at the same week expiration. So those closer to the monies, instead of being 1,200, they're going to be 700 now. So you're going to make money as it decays. Selling options in general. But same thing but selling puts, you want the stock to go up in order to make money, or just chop sideways. Selling calls, same thing. You have to actually have the shares though. So instead of having the money just sitting in your account to sell puts, cash secured. So say I sell these puts here at 200 that expire this week, but they expire around 190. So I have to purchase the shares at 200, but I get to keep this $480 in premium. On the call side, you have to have the shares regardless. And if you sell a call, then you want it to go down. But if it expires above it, then you have to sell your shares at whatever strike you sold. So it's very different. But like I said, the odds are on your side to make money rather than buying options are great. You can make a ton of money on options. I trade them all the time. I buy them all the time. But in terms of long-term investing, compounding, making premium or income for yourself, if you sell them, you can make a good amount of money just by collecting it consistently. And I'm telling you what, if you sell them and you make $200-$300 every few days off of them, those add up like crazy. So can make $1,000 a week easily off of selling options, even with like a $5,000 to $10,000 account. And $1,000 a week, $50K a year, cannot argue with that. Just extra side income, and then once you make more money, this is a huge bear flag. Look at this little inverse cup and handle, little pop. Now we're getting rejected down here. If it breaks below this 398.71, I could see us filling that gap and going red today. Yeah, this looks pretty weak. This looks like it has room all the way down to this where we tap the high of the day on Friday, which is 397.45. Has to break this level though. It looks like it might. A lot of sell side over here. But yeah, so I wanted to talk about selling options because of how much money you can actually make on them. You can't really beat it at that point. You're just kind of sitting there and making good money. Yeah, SPY puts you could also make money on right now, in my opinion. I don't know if I would take them right now. Trading these stocks right here, usually you're going to see this right here. You're going to see a nice little spike and then a drop down. After a massive sell-off, you're going to see most likely a little green candle and then some more downside pressure. But I can't imagine that this goes down too much more. I would assume unless we hit like a really massive sell downtrend, this would chop sideways. You'll see a couple lower wicks here and it'll bounce and then you'll see a reversal at some point. So there's a lot of room down to this 398 level, but that's really only $1. I don't think you're going to make a ton of money unless you scalp a trade. And if you're scalping, I wouldn't recommend buying near the low of the day. But to each their own, you can make a good amount of money off this. This kind of looks like a head and shoulders pattern as well. So if this bounces back up to 400 without breaking the low of the day, this could be a pretty nasty sell-off. But I would not chase puts down here if that's what you're looking for. Usually after a big move like that, it's going to go sideways, consolidate, and figure out which way it wants to go anyways. And we just talked about theta decay, and if you're trading same-day expirations, you're just going to get destroyed. So not worth it. The hack of the world is having 1,000 shares of SPY. That's usually where most of the people that I know make the most of their money. When they have 1,000 shares of SPY, they're looking to invest their money for the long term in these ETFs. Obviously, QQQ is also a good one, but for people that have 300K, 400K saved up, you can just sell options. You can sell 10 of them because they're all same day expirations. If you look at SPY, like $73 here, or even next days. Look at these. You can make 1,000 a day, really, off of just selling these as they get closer to zero, or even 200 times 10, 2,000 a day. Just looking at these option contracts, it's really crazy how they're same days every day, and they'll start to decay like crazy. So if you're on the wrong or the right side and you sell them, bread. That is bread. Once you have 300 or 400K saved up, you can make anywhere from $5,000 to $10,000 a week just selling options. If you're good, of course. Tesla was very strong. I would say that any dip back, yeah, I say this pullback is a pretty nice entry point to head higher. This is probably going to 210 today, so those 210 contracts are probably pretty expensive. I'm not buying much today because I'm just sitting on the sell side of things. I'm trying to switch the mindset for everything that I'm looking at. These contracts are also great. Down 98, 615. I'm trying to look at the sell side of things just to promote that because I feel like no one ever talks about selling options. So I just want to talk about how consistent it's going to be. I'm going to track all the money I make just off of having I transferred over 20 grand to an options account. So I'm going to be selling options and taking that to hopefully 50K in the near future, just selling it. But I'm going to show how much the win rate is and how consistent it is. Create content around that and then really post that often on my social media so people can realize that it's slower, but there's less red days. It's more consistent and the odds are well in your favor. So I can show you how much money you can actually make just by selling options and being active in your account. So that's the goal. I hope that there's like a pretty good. It's on my social medias are on here. If you go down to the bio, it's down here on the bottom of the stream. But it's at next era underscore trading. I put it on. I mean, I have so many more, but Instagram is where I will probably track a lot of it, and the YouTube. TikTok I don't really use anymore. That was my first platform that I blew up on, but it has just been garbage ever since. At Next Era Trading everywhere else, Twitter, TikTok, YouTube. YouTube, I've really kind of focused on that a lot more. This has got a nice breakdown candle, so I'll probably stay away from Tesla. But I think that the SPY is really kind of setting up for another leg down at this point. It's kind of just sitting here at this level, forming a nice little wedge pattern at the bottom. Could consolidate to try to reverse, but I think there's still some weakness. But like I said, 401, unless you caught this rip right here, or this one candle right here to break down, it's going to be really tough to make a good amount of money unless you're scalping options. So you can see it's only bouncing between 320 to 400 here on the SPX, which is one of those more fast-moving stocks. If you had SPY just chopping between 40 cents, it's not going to make a good amount of money. So I think if this is bear flagging, you could probably see this 398 low pretty quickly. So if you wanted to scalp that, I don't think that that's a bad idea. But once again, I think that this just consolidates and then at some point bounces. But on these sideways chop days that we've seen since probably October, give or take a few gap ups and gap downs overnight, there has been a ton of theta decay and chop over time. So that's kind of why I'm switching the perspective to selling options more. And I did that for longer term accounts just against shares, but I see a ton of the opportunity of trading them as well because these slow, consistent gains would make a great amount of money. So back to Snowflake. She's chopping around 149. So if I go back to the option premiums real quick on Snow, it's probably still in my favor. So you're going to see how these 146 puts are trading at still 550. So that is $70 less than where I sold them from, and I sold them right here at 150.16. So I sold them higher, and they're lower now, and I want this to go up because I'm selling puts, so it's opposite. And it's below where I sold them, and I'm still up $70 a contract. So if I'm up $70 and overnight, I'm going to make an extra $90, 150, and then another extra $90, 250. $250 for holding for 2 days, $300 for holding for 2 days is just easy compounding money over time. So it's just easy collection, just trying to get people to understand that you can make money on your long-term shares, your Roth IRA, whatever you want to do by selling options because they are designed to go to zero. So think of it like an ice cube. If an ice cube, you take it out of I say this all the time, but if you have an ice cube, you put it on the counter, it's going to be really strong at first, just like these option contracts when they're created. But as it gets closer to that expiration date, it's going to melt and melt and melt a lot faster. So by holding these, even if you try one in the TQQQ here, you only need $2,200 to have it test out in your account. You could sell these and basically sell them for $60, $40, whichever one you want, $20. You could keep it really, really small here. Say you want to sell these puts at 21. You think it's going to bump up a little bit since it's at 22. You could sell these, make $27, and watch it decay. Overnight, you'll be up 50% on the trade because it's going to lose $10 in value, and it's going to chop throughout the day. So not bad. Not bad. Not a bad life to live. Very consistent, low stress. And that's all. Thank you for the subscription, Simon. Thanks, buddy. But yeah, so we're breaking down here again. Like I said on the SPY, I think that there's going to be that 398 level before we see any sort of bounce. But I think it's just going to be slow. I think it's going to be slow chop, slow movements. You're going to have to scalp these. Pretty nice movement setups here. But this 398 level, I should have probably just bought that put. But I'm just going to be waiting on this sell signal for now. I would assume that this is going to start chopping a little bit, and then we're going to see a nice little bounce at some point. I might signal some calls here in a little bit, but once I start day trading the call side or the buy side, I will let everybody know. But I'm assuming some chop down to this 398 and then a bounce level around there somewhere. I guess there is a lot of room down to that 396 too. I'm going to make this just a level here just in case. All right. I guess there is a little bit of room down. But I would still assume that there's going to be, on this Bollinger Band, might walk it down, but it's going to be really slow. So same day expiration is probably not the best. I would probably swing more so next days or next weeks or a couple days out if you're looking to trade the SPY or anything else. The video got rejected. I was looking for this to tap 240 today, and it only hit 238.80. This daily chart is very ugly, by the way. There's a massive gap from this 229 all the way to 210 from earnings, but not so bad. Apple, also a good opportunity to sell some calls here. All it does is chop, so. But I think if you're just starting out in this, Coinbase is a really great place to start. And yeah, that's all I got. That's all I got for the sell side of options. I like the downside right now, but I would look more so for a reversal. I think Shopify is going to zero. I think they're garbage. But this is about a $23 drop. Okay, so it'd be about $16. You could even do some Shopify options if you wanted to. If you wanted to sell some shop options, they're about $100, $75. You could just collect per option you sell, obviously per 100 shares, so you need to have about $4,000 in your account. But obviously not as big of gain potential, but I think that people get too wrapped up in the stock market thinking that they're going to make 100%, 200%, 300%, when in reality, if you just sold them instead of bought them, you could make that easy 20, 30% just by holding it and letting it decay. So might not be a ton at first, but let me tell you, it really does compound. Everybody starts somewhere. So once you're able to sell 10 of these, or you have $16,000 or $40,000 to invest, and you have 1,000 shares, and you can sell 10 of them, you could collect 1,000, or you could move up to Tesla and buy, I don't even know, 200 shares. You could do 200 shares and collect $2,000 a week, or $1,500 a week, or 1,000 a week. It adds up like crazy. So you got to start compounding that money somewhere. And I think selling options is a great place to start, especially with some of this chop that we've seen for so long. Every single day, it seems like the market moves sideways, or there's only one really good move unless you're scalping, and now you're starting to see that bounce. These huge lower shadows show me a lot of buyers are down here at some point, especially with this large volume. I would imagine that we start to reverse at least towards this VWAP line of 400. So hope that helps out. If you need anything, if you have any questions on any of this, just let me know. I'll help you out. I'm going to create the video. I'm also going to save this video. Subscribe to my YouTube channel. I'm going to start posting a ton of longer form content on a lot of this stuff as well, because Instagram, you can only do like 60 seconds. So I'll be posting a lot more on YouTube about this. I'll have a bunch more coming. So yeah, that's about all I got right now. Like I said, I think the SPY is going to bounce at this level. You're going to see this. I don't think I'm going to buy an option on this yet, just because I hate Mondays. Monday buying options trading just sucks because it just decays, which is why I sold this. It's down to $5.35 now, so I'm up $80, $85 on my contract. So telling you guys, trading options is great. Selling them might be the best way to do it. I know that's not the biggest gains, but on days like this where it's just choppy and you're looking for short term here, I think it's way better to sell them, because you're just going to collect that decayed premium. In terms of like swing trading and stuff, if there's a really good setup and you want to put some size on it, obviously they can run like 100 to 200%. Then it's probably better to buy calls when the risk to reward ratio is really there. But nothing wrong with selling options, collecting that premium, and using some profits to maybe buy something that can make you even more. So think of it as playing with the house. Don't risk too much money that you're not willing to lose. And as you can see, these contracts are worth 525 here or 530 a piece. So as Snowflake is literally below where I still sold them at. I sold them at 150, and keep in mind I want this to go up. I don't want it to go down to 146. So I sold this right around this level at 150-ish something, and it's still below where I bought it, but I'm still up almost $100 a contract because of theta. So think about paying yourself first. Don't try and time the market. You're never going to time the market perfectly. I love to buy options. I'll never talk shit on that. But when you sell, you are just literally putting money in your pocket. So obviously you have to have really good execution still and all the analysis as well. But it's a lot easier to have two things out of the three on your side than one versus three. So that's all I got. If you have any questions on it, I'll be posting more videos on this on YouTube and stuff. So stay tuned. Subscribe to the channel. Last thing I got is I have a podcast coming out tomorrow, and it is on a lot of options trading with an entrepreneur, stock market investing, marketing yourself as a whole, and any company that you want. So really good podcast with a really great guy. So he's got a lot of knowledge to give, and it's just a great conversation. So if you have about 30 minutes, go check out My Next Move podcast, and that'll be out tomorrow at 5 a.m. I think it releases. So it's a good one. But let me know if you guys need anything.